Awesome. So great. Thanks, Angela, for that transition. What we're going to be talking about now is kind of the middle of the funnel, working our leads, how we're passing feedback back to the marketing team, right, and getting them to essentially sign and invest or buy, right. So you've got these leads coming in, they're coming from multiple sources. The biggest thing now that you've identified who your right person is and you've identified, how to get this person to interact with your website, your content, etc. Um, Now you are qualifying them, right? In the sense that they are asked essentially a series of questions, right? So you're questioning them, you're making sure that these are legitimate folks, right? And I don't mean that there are illegitimate folks. I just mean that they are qualified. And what that means is they are accredited investors. If you have a non-accredited investment, that's different. But they are accredited or not accredited, something that's very, very important because it ends the conversation very, very quickly if they're like, oh, I don't know, or they just say no. If they don't know, that's honestly not the end of the world. A lot of folks are accredited investors without knowing it. Going back to, I think I've already mentioned this, but an accredited investor per the SEC definition is someone who has $1 million in net worth, not including their primary residence. That can be in any number of things. It can be assets, it can be cash. If you have $1 million in the bank, and your net worth doesn't include your primary residence, you are an accredited investor. It can be a stake in a business. All of that plays a part. It could be your 401k if you have a significant portion of that, or your brokerage account. So another question, right? A good follow-up question is, okay, well, if you don't know, do you work with a tax professional? Do you work with an EA, an enrolled agent, or do you work with a CPA? If you don't, generally funds, firms, companies, they know folks. And so it's always good to make a recommendation if they don't, because then you're building that relationship between CPAs, which is something that Angela mentioned, which can be an invaluable referral program. One, because CPAs can't get paid any sort of referral bonuses because they have fiduciary responsibilities to their clients. And two, when a CPA signs off on an investment, it makes everything much easier for the firm and for the investor because they have peace of mind that their CPA says, "Hey, this looks good. It's sound. I've gone through the paperwork." Same with an attorney, or if they have a tax attorney look over the documents and the investment itself. Always something good to have. Which is like any sales cycle, you need to buy in from, if it's a person, is there a partner? Is your partner going to be involved in this? Are you single? Are you married? Etc. And so these are the types of questions that you're asking, because these questions lead to more questions. One
If
of
I
them
can
being,
interject,
yeah,
that's
yeah,
a really
absolutely.
good question. The point about that and the accredited investor, what's interesting is that there's also the second set that you mentioned earlier, when we were talking about the top of the funnel, and it's by your annual income, the household income. And I think for younger investors, they may not have the $1 million in the bank, but
Yeah,
surprisingly, they're high, they have high salaries, right? So if you've been making over $200,000 for the past 2 years and you expect to make that, you just need a letter from your CPA. And
yeah,
I believe joint, both you and your spouse is $300,000 for the past 2 years, which, to be honest, I think in coastal states, like California, New York, a lot of investors don't realize that they are actually accredited. So I just wanted to point that out.
yeah, and that's a good point, right? And that's something that I was going to come back to, was the letter of accreditation. So just because you are an accredited investor doesn't mean that you can self-certify. So you do need to make sure that you are getting a CPA, tax attorney, or there are websites online where you can do that. But once you have that, once that's validated, it makes the conversation a lot easier because this person is now an accredited investor. And when you get to that point, let's say all of that rigmarole is out of the way. It gets to, okay, well, the minimum investment for this is X dollars. Is that something that aligns with what you're looking for? Is that the size of investment that you're looking to do for this type of product, this type of building or development project, etc. And so making sure that they feel comfortable with the minimum investment, early on is a key to closing them later. If they know that, before you get into the pitch, before you get into, discussing performas and all sorts of risk stuff in your prospectus, right? I mean, that's, it's very important. If they're not comfortable with the minimum investment, say, obviously ask them why. Why do you not have that, or you don't want to tie up the money for this much? You want the liquid asset, and ask those questions, because that's important to know. But any investor generally who is uncomfortable answering these questions or talking about it, I'm not saying it's 100% true, but it can be indicative of folks who are not necessarily ready to invest, right? So going to Angela's point about younger investors, folks don't know what they don't know. And so, like I said before, the biggest thing is that you're educating, right, to earn the right to sell to folks. And when you're doing that, when you're educating, when you're presenting information, but throughout the process qualifying, you're able to gather information, present information, sometimes 2 or 3 times over, so that it really, really sticks. But that way, when they actually do sign, it is their decision. They feel comfortable, and it's it's just a done deal. Something I also did want to talk about was the feedback loop to marketing. So when you're qualifying these folks, always ask them. One of the first questions I always ask, and I have my reps ask, is, how did you hear about us? And it's sometimes they say, oh, Google ads, or Facebook ads, or whatever. Sometimes that's not true. Sometimes they'll be like, well, I did click on a Google ad, but I actually heard about you from my friend who heard about you from some podcast, or heard about you from some, like Angela said, some Reddit thread. And that's important, right? Because when you're giving that feedback back to marketing, they're able to add more invaluable marketing budget to those lead sources and be like, hey, like, we're seeing a huge uptick in this particular lead source. We should put more money here, and see what happens. But going back to my point about annual budgets and saying, oh, well, how many leads did we get from here? How many leads did we get from there? It makes it much easier to plan ahead, right? It's all about building scalable and repeatable processes, so that you can plan for certain things, right? So it's like, hey, like the summer months are slow, or December is really slow because it's the holidays. But when it comes to investing, sometimes it's the opposite. Sometimes summer is when it's really bored. People are really bored, and they're on vacation, and so they don't have a lot of stuff to do, and so they're reading about investing, right? Which is another thing to consider, and ask them is, hey, are you a full-time investor? Are you a part-time investor? Is this something that you're doing kind of after you've clocked out of work? And understanding that will continually it will help you better understand the psyche of your ICP, right? And then sharing that information where it's like, hey, a lot of these are part-time investors. These are folks who are, they're clocking out of their regular 9 to 5, jobs, and they're looking at this, basically after the hours of 4 or 5 p.m. And so their time is very valuable, right? Because they have kids, they have a family, and that's something that you need to share with marketing so that they can take that into consideration.
100%. You're right. Because if the investors are doing all this after hours or on the weekend, and marketing is doing all the email marketing and ads during, work hours, then you're just wasting that money. I mean, I think
Exactly.
that's really important. And I also like the point that you raised about, the feedback loop, and also really asking your leads, like, how did you hear about us? Because I think there's a lot of misconception that marketers we rely on data, right? So we look at the data that we see on Google and so forth, and in HubSpot. But oftentimes, it's not as straightforward as you think, because, like you said, investors may have heard about you through one of the articles where your CEO was quoted in, or they saw the billboard and then they decided to Google you, and then they just happened to click on the ad. But that lead shouldn't be attributed to Google Ads, because there were all these organic ways that they found you. So I like that, when you have the right sales team in place, and they are, they're asking those questions and really asking, I think that helps marketing. So that's a great point.
Yeah, 100%, right? And that constant feedback loop is going to make it very, very valuable, or make it very, very effective to create, cascade reports, right? These conversion rates to see, okay, well, we're getting leads from here. These are converting higher into opportunities. These opportunities are closing at a higher rate, right? And when you track all of that, it sounds very granular, but especially when you're starting out, it's very, very important to track this because your marketing and sales budget is generally going to be very low. A lot of the money that your firm has is going to be more focused on development, right? Building the buildings or refurbishing the buildings or buying the buildings or et cetera, the properties, et cetera. And so it's good to know where your investors are coming from, how they're thinking, what is getting them to convert, and making sure that they're moving through your process, not theirs, right? Which is key to any sort of sales organization is have a process in place. If you're using HubSpot or Salesforce or any sort of CRM out there, make sure that your deal stages from open to close have a clear path for your reps where they understand, okay, if this is if they're at this step, the next step is this, which means I have to do this, this, and this to get them to the next step. And so every step of the way, you're taking good notes, you're getting feedback, you're passing that along to the management, to the marketing team, so that they know what to do, what not to do. If you're throwing a bunch of money at just for example, like LinkedIn ads, which are very expensive, and you're not seeing results, pull the ads, right? I mean, you can build branding on LinkedIn very organically through posts and comments and partnerships. But if you're seeing a lot of ads on LinkedIn or a lot of ad clicks and conversions on LinkedIn, share that information as well, because then it's like, hey, well, it's expensive, but it's a great way to get these leads, and they tend to be higher quality. So all of this is very important. It seems silly, it seems superfluous, but overall, getting the more granular you can get on every single lead, when you're focusing on quality leads, like Angela said, right? It's better to get 100 leads than 1,000. If you can dissect every single one, or at least some of the most, the ones that stick out, that's very, very important. So running a postmortem, running any sort of like deal reviews, pipeline reviews every week. It can be tedious, but it is important to the health of this pipeline, right? Because anybody can just spend millions of dollars on ads, get a bunch of leads, try to see what closes, right? Give them a quick pitch, but unfortunately, the days of boiler rooms and the Wolf of Wall Street, like those are gone, right? You can't do that. You have the internet, which empowers folks with a lot of information. So people know what the information out there, and they can make up their own minds without ever having talking to you. So when you're speaking with them, make sure that you are genuine, truthful, and always making sure to treat them with respect, because people buy from people who they like and respect. So when you do that, it builds a lot of trust. A lot of the times, these firms are building from the ground up, and so if that's the case, it's a 3, 5, or 7 deal cycle for the development. Your client, your customer, is going to be in your your network, in your database for the next few years. You want to make sure that they're happy, because once they're closed, once they're doing that, they're inviting their friends, they're telling people, which is another great lead source to share with Angela's with marketing is, hey, these people are telling people, they're telling their friends. Folks want to invest like their friends. They want to invest like people that they see are quote unquote successful according to their definition. And so referrals are a great way to, and that's something we'll cover later, but is a great way to get more ROI out of every lead source. So every step of the way, making sure that you're educating. But in summation, the most important thing, right, is sharing. The most important things that we covered are sharing the information with marketing, telling them where these leads are coming from, how they're thinking, how they're interacting, working them through your process, your defined process through, the deal stages, as well as, presenting as much information as possible. Content creation is very important, but having that on hand and sharing, hey, people really like this piece of collateral, they don't like this, et cetera. All of that makes a huge difference when you're dealing with, high quality, high net worth individuals. Their opinions matter. it's much more important than if it's just buying something on some large online retailer, right? Like their feedback can be important, giving 5 stars, but it's not as valuable when it's thousands and thousands of people. But when you have a couple hundred really high quality investors, their feedback is very, very important. So always make sure to take take those notes and jot that down so that you can share that with the marketing team, with management, to optimize the messaging, the branding to really resonate with your target audience. And as always, don't sell, just close them, right? You shouldn't be pitching them. You shouldn't be trying to convince them. You should be presenting the information saying, hey, yeah, this is the investment. This is the product. This is what we project as far as returns, as far as, tax benefits, et cetera, associated with this. And then let them make up their own mind. Obviously don't give them too much power, but, make sure that you are presenting them with the information and then close them, right? Don't always close for a next step. Make sure that there's an old saying, don't leave a meeting without a meeting. That is very important, right? Always have some sort of next, clearly defined step to make sure that these folks are continuing to stay engaged. And if there's a webinar that the marketing team is promoting, hey, there's going to be a webinar, you should hop on and ask questions. You can do that anonymously, or if you want to come to some sort of, if you're speaking with local investors in your area, in whatever metropolitan area that you're in, hey, come to our happy hour. I know it can seem kind of stuffy, but we just want to get our investors talking to each other so that they understand, like, they're investing with people just like you, right? They're not investing into some big faceless, corporation, right? And it may not work at every level, but stuff like that, the webinars, the meetups, all of that, it can help foster a community where you have a constant feedback loop from the clients to the sales reps, to marketing, to management, so that what these folks are thinking all the time, and you can really take that into consideration and build your company around it.
That's a great point. And I really like the follow-up, process that you're recommending, because, I would love for you to kind of tell us more about what the sales team can do to continue staying in touch with the people that, you first talked to. Because I think oftentimes, people focus so much on, net new leads because it's exciting. But after the first or second conversation, let's say that they get a little cold, so to speak, right? So
Mm-hmm.
what can the sales team do to continue to like nurture and keep in touch with them? And how does maybe having some system in place help with that?
Yeah, that's a great point. So I think that the most important thing, right, is to mark these folks in your database, either by using some sort of lead status or some sort of opportunity stage, right, to connect them to whatever marketing drip or nurture campaigns that the marketing team has set up, so that they're routed correctly, and they're getting the right content. So if it's someone who came in through a specific lead source and marketing has a nurture campaign that's built around that, make sure to mark that, because it'll have more relevant information to them. The other thing too, right, is making sure that you're not pushy, right? You don't want to be pushy with folks when it comes to investing, when it comes to buying any product. Those days are gone of strong arming people into buying something or investing, because frankly, it's not fun to be on the other end. We've all had to sit through some awful sales pitch, or had a very aggressive salesperson try to sell us on something that we didn't want, and it comes off as desperate. So as a firm, as a fund, as a private equity organization, et cetera, when you're trying to get folks to invest, when you're trying to get them to buy in, you don't want to make it seem like you're desperate for investors. So always just use a light hand, hit them with a velvet hammer is a term that I've heard, right? Is make sure that they are consistently hearing from you. They're consistently seeing the name of the company, which is, the most important thing, because it keeps you top of mind. It keeps you relevant. So always having that, but basically always working with marketing to tag these folks, earmark them correctly so that they're getting the right content, As far as like from a sales point of view, once they're closed, once they're clients, make sure to follow up with them. Don't just set it and forget it, because going to back to our original point, they can be a huge lead source, which overall will get you free leads, and increase the ROI on specific lead sources, right? So if you look at one particular lead source and you're getting a ton of referrals through there, it's like, oh, well, we should probably keep going and try to get more referrals and create messaging around referrals, because it's clearly resonating with this specific type of person. And so it seems granular, it seems tedious, but all of this is incredibly, important to creating a sustainable pipeline. Like Angela said, there's a huge focus on new, but like she also said, there are only a finite amount of accredited investors in the United States, and that being said, they talk to each other, and so if you burn one, you're burning more than you think. So going back to my point of, be truthful, be honest, be genuine, and treat everybody with respect, because this is a small demographic of folks that they will talk to each other. But like a restaurant, if you have a bad meal, you're going to tell, if you have a good meal, you're going to tell, three people. If you have a bad meal, you're going to tell everybody. Same thing goes with sales. Same thing goes with investing.
And I think, with the accredited investors, we talked about not only marketing and selling to the current demographic of investors, but we have to think about the future. And I think, with the millennials, I mean, at least I can speak for myself. If I fill out a form or if I contact you because I'm interested in buying something, but then, one of your salesperson calls me right away, you lost your sale. I am never, ever buying from you because you didn't even give me a chance to ask questions or, to just kind of do my own research after that.
Yeah,
And I think millennials, we hate picking up the phone, than anything else. So I think things like that, that's why I think Carvana, can be successful with younger generations because everything is done online. You can text people and do all that. So I think that, with the sales, it is important to know who your audience is and, what
yeah,
investors that you're dealing with. And, I guess customize your approach that way rather than saying, this is the way we've always done it. We're just going to call them until they get exhausted. It's like, maybe that's not what your investors want. They
yeah,
don't.
exactly. Yeah, and that's a good point. So you have to know within your demographic which demographics, do it this way. You can separate folks by, you can separate them in a number of ways, but I think generationally, that's something very important. I'm a little different than Angela in that if I fill out a form and somebody calls me immediately as a salesperson, I'm like, wow, this person is on top of it. But I also don't mind being on the phone. I guess I'm in the minority of millennials, but as a salesperson, being on the phone, it's always faster, right? And so that being said, if I'm trying to sell Angela, who is someone who doesn't want to be on the phone, maybe I'll text her, maybe I'll shoot her an email first, right? But having those processes built out where it's like, okay, perfect, there's a new lead, let's get them into a sequence or a cadence or some sort of system like that where they're going to get an email. Either it's automated by marketing or it's automated by the salesperson, but you're jumping in, right, and you're saying, hey, my name is so and so, I'm with this company, here's my contact info, give me a call, or here's a link, feel free to schedule time with me at your convenience, right? And so that's always a good first touch. Picking up the phone and calling someone can seem, like Angela said, it can seem kind of desperate or kind of pushy. It really depends, right? It really depends on the message, right? What they say in their form fill.
Mhm.
So let's say you're dealing with someone who needs to invest in the next month. Okay, perfect. I'm probably going to pick up the phone and be like, hey, let's get this going so that we have enough time to do this. I know that in a past life there were some tax advantaged investments that were happening, and December 20th through 28th was just crazy, right? Because folks are trying to get it in before the end of the year. You're picking up the phone immediately. But if someone reaches out to you in January, much different conversation, right? Send them an email, try to get them in touch. But I know personally and others in the industry, they've closed $1 million deals via text, because some people that's how they prefer to communicate. So it's all about tailoring that messaging, tailoring your communication style to that person. Going back to my point of making sure that the process is yours and your control. It's not necessarily the way of doing things, right? Let your sales reps, let your IR folks do things their way. That way they can add their flavor to it, so it doesn't seem cookie cutter, like they're reading from a script. But also say, hey, this is the process that we have, where we need to get them on a call, we need to show them the information, we need to have them ask questions, whatever the process is. That's what you want to stick with. You want them to stick to. But within that, under a level beneath that is, you do want folks to tailor their outreach, their communication to their clientele, right, and their preferences. So if Angela were to form fill, I saw her message and I looked on her LinkedIn or whatever, and I'm doing research, I probably would send her an email first, right? I wouldn't necessarily just call her, but maybe if I did call her, I would call her and be like, hey, I don't want to take too much of your time. I want to be respectful. If you're not ready to have a conversation, that's fine. Why don't I send you some information and I follow up with you in a week or two? And that way you're doing a little bit of what you want as a company, as a sales rep, but you're also respectful of your client. But every step of the way, making sure that they feel heard, they feel like they're taken care of, right? Giving that white glove kind of service that it doesn't really take a lot of effort to do.
I love that. Excellent. So maybe we can talk more about, once you qualify them and, they're continuing to engage with you, what it takes to really convert them, like to close them. So maybe,
Yeah.
maybe that's something that we can talk about.
Yeah, let's talk about that quickly. I mean, it's pretty straightforward. There are only a few things that they really care about when it comes to an investment. The first one is always what are the returns, right? What are you projecting? So are they high returns? Are they low returns? If they're high, what's the downside? What's the risk? If they're low, well, what's the upside? Is there any variation? So it comes down to whatever you're investing in. It really depends on the type of product that you're pitching them. But at the end of the day, right, is seeing where they're at. So if you're projecting high returns, making sure that they understand the risks involved, right? Because there are risks to every investment, to every purchase of anything. And making sure that you hey, here in our prospectus, these pages are where the risks are. And it could be 40 pages worth of risk, but the biggest thing is that they know where they are. They have that information. If you need to set up a call of an hour of just, answering questions. I once had someone send me a Google Doc of 50 questions, and all we did for an hour was answer those questions. But they invested, right? And that's what it took. So sometimes it's as easy as, hey, I have this one question. Okay, I answer the question. What's next? And they're like, perfect. Send the documents, right? It's really depends. You're catching folks at different parts of their buying cycle, and so obviously skipping steps and jumping from point 1 to point 10, step 1 to step 10, do it, right? Do whatever it takes to get that close, but make sure that you are presenting the information to the client so that they, they feel empowered, they feel educated, right? And they feel comfortable investing.
All right. I love that.